Bearish sentiment in the Nigerian equities market has trimmed the NGX All Share Index year-to-date performance to 18.1%. Analysts at Parthian Securities say that they expect the sell pressure to continue as investors exit the equities market for safer haven. And I have Abimbola Adeoye, senior investment broker at Parthian Securities. She joins me now to look at the activities in the equities markets here. Thank you so much for your time today, Abimbola. We're seeing bids continue to hold sway, 7th consecutive session of declines today. And I'd like to get your take on the sentiment so far. You think we're going to see this continue for a bit?
Thank you for having me. Okay, so like you mentioned, the bears have dominated the market, and yet today we're seeing the All Share Index return 18%. The sell-off has wiped away some of the gains that we have seen that was recorded in the market earlier this year. On Monday, MTN was the major trigger in the market. So we saw MTN lose about 6.9%, and it lost yesterday, which was another trading session. And today again, we saw MTN lose about 1%. So that triggered some sell-off in the market. And the reason why we're seeing the sell-off in the market is not far-fetched. It's mostly because of the Monetary Policy Committee that decided to hike rates to about 14%. Based on this, so investors are actually dumping equities and moving into the fixed income market. If you remember clearly, at the first half of this year, we saw that the major reason why we saw the impressive performance in the markets was mostly because of the low yield environment, low fixed income yield environment. But now that things have reversed, investors want to, they are dumping equities, which is a risky asset, and going into a safe haven security, since the outlook in the fixed income market is the outlook we have for fixed income is upward trending. The yields would continue to rise. So we think that this sell pressure would continue for the near term. So most likely this sell pressure will still continue until market has corrected itself, and then we start to see buy sentiment again in the market. But for now, the sell pressure continues.
All right, we'll continue to monitor that sell pressure and see how it continues to play out there. But I'd like to get your take on the second quarter earnings. And I'd like to start with the consumers. We saw Cadbury results come out. What's your take so far?
Okay, so Cadbury results was really impressive. It looks like they are out of the wood already. So their revenue grew like 50% year on year. And their cost, they were able to manage their cost to a certain extent. So for 2022, for the first half, we saw COGS was around 30%. It grew 34% year on year, and their profit after tax was about 554%. So the major driver of this result is mostly the fact that they were able to sell more of their beverage goods. So that contributed largely to what we saw in the revenue. And that is why we're seeing the impressive performance that they gave. So their profit after tax was it was a triple digit figure. It was close at or it printed at 554% year, which is a very impressive one for Cadbury. Hopefully they are able to sustain whatever the driver is in the long run. But for now, they are out of the wood.
All right, now you say they manage their costs better, but we can't say the same for players in the industrial goods space. We're seeing Boa Cement here, cost of sales up about 47%. What's your take on the Boa Cement earnings?
The Boa Cement result was not bad. As a matter of fact, their profit after tax also increased by 41%. Revenue was double digits growth, about 52%, but their cost, like you said, was around 47%. It was a good performance year on year. It was a very impressive result. But what we do not really like about their result was the fact that the finance cost was higher. It was higher by almost more than 200% actually, and we think that this will continue to happen. So far they are looking at borrowing more to expand their production capacity. So it was a good result. I mean, 42% or 41% profit after tax is not all that bad in this kind of environment.
All right, now let's get to the banks. I understand EcoBank have an investor call today and to give more clarity on their earnings, and I'd like to get your take on EcoBank and FCMB results.
Okay, so for FCMB results, it was a very good one as well. So since we entered the earnings season, most of the results we've seen so far so good has been very impressive. FCMB results was one of them. FCMB grew their top line, it was double digits, and the major drivers were trading income, trading income. We saw their income interest also grew it was double digits. So that actually filtered into their bottom line. Their bottom line was about 74% year on year, which was a fantastic one. The same thing applies to ETI. It was a double digit growth as well. So we think that this high yield environment would enable the banks to actually do well.
All right, but Abimbola, looking at some of the other challenges that players in these markets could face, for one, I'm looking at the FX challenges here. One around the local currency weakness. We see the local currency continue to weaken against the US dollar, and also the challenges companies will face to source dollars. How do you think this could impact in their earnings going forward, further down the line?
So for the FX challenges, we think that the speculation will still continue. As of today, I think dollar was about 670 naira per dollar, and naira was about 670 naira per dollar. And we think that if the demand in the economy, if it continues to increase, which is mostly driven by BTA, those that want to go for summer, those anticipation, those are looking for FX in anticipation of the school fees that we paid in September. We think that this speculation would most likely continue if CBN is not able to supply whatever the demand is in the market. And for the equities markets, the FDIs and the FPIs, we've seen low. So there was a report that was recently shared by the NGX. We saw in May, 7% was what the offshore investors, the foreign investors, participants in the market. But in June, we saw that it increased to 26%. But if you look at the figure that was traded in June, it was lower. It was lower compared to what we saw in the first 5 months of this year. So the offshore investments would, going into the year, was most likely be low, given that the Fed has started to increase rates. They have increased rates already like 3 times this year, and we think that foreign investors would actually want to hold back in their economy instead of coming into the emerging or the frontiers market. So there's going to be a negative impact in.
All right, thank you so much for that breakdown. We'll definitely keep an eye on how things develop here. Abimbola Adeoye, senior investment broker at Parthian Securities there.